when US interest rates rise, as they did in 2022, US bonds become more attractive and investors flock to buy them in US dollars, so that strengthens the dollar. That's been the story for years, but in April 2025, that logic broke and these lines diverged. US interest rates remained high, yet the dollar began to weaken. Investors started selling dollar-denominated assets, willingly giving up a higher return. And this divergence could be an important warning signal. There are a few compelling reasons for it, and it's a signal that the market's focus has shifted from seeking higher returns on cash to uncertainty about tomorrow's economic risks. This chart shows one of those risks, the US debt crisis. The debt to GDP ratio now stands at 124%. That means that US public debt, which tallies up to $36 trillion, is bigger than the entire American economy, and has been for years. This is why in May, Moody's downgraded the US government's credit rating from AAA to AA1, reflecting real fears about the long-term sustainability of the US debt burden. This calls into question how risk-free US treasuries actually are, and is likely a big factor pushing some global investors away from US bonds and into foreign markets. But not everybody is fleeing the US bond market, and this chart proves that. This line shows foreign ownership of US treasuries, and this other line shows that as a percentage of US public debt. As you can see, beginning around 2015, the growing US debt pile really outstripped the rate of foreign purchases of treasuries. That's why this line goes down here. But since 2023, that trend has reversed, and foreign investors have begun ramping up their purchases of US bonds. In fact, foreign ownership of US bonds reached an all-time high in July, reaching $9.2 trillion. There's an apparent contradiction here. If demand for US treasuries is increasing, then the dollar should be strengthening, but it isn't. The dollar is weakening, and not just against the euro. This is the US dollar index, or the DXY, which weighs the dollar against a basket of major foreign currencies. And it's quite clear that the dollar has been weakening since January 2025, which means that even given a record foreign ownership of US treasuries, there is still more selling pressure on the dollar than there is buying pressure.